Economist Azar Jammine, who is standing by to have a conversation with us about that. And Azar, thank you so much for your time this afternoon. Let's just start with your reaction. A number of economists had actually predicted that, the rates would be kept unchanged.
I think there was a general expectation that the rates would be kept unchanged, and that is simply there's a number of factors contributing towards this. The first is that the actual inflation rate is still significantly above the 4.5% level that the Reserve Bank is really targeting. That's the midpoint of the inflation target. We're currently at 5.2%, so there's quite a long way to go still downwards. Secondly, interest rates have still not been reduced in the United States, for example, and that's a critical basis against which we basically determine our interest rates, because if we were to cut interest rates before they did, that could put downward pressure on the rand and reignite inflationary pressures. But what did impress one was the extent to which the inflation expectations of the Reserve Bank have been reduced by 0.4% for the fourth quarter, from 4.7 to 4.3%, and for the core inflation rate down from 4.9 to 4.6% in the fourth quarter, which means that towards the end of the year, we may well have come back down to being close to the target of the Reserve Bank, and that may well provide us with the scope to cut interest rates by then. And what further supports that view is the fact that 2 out of the 6 members of the Monetary Policy Committee actually favored a reduction, 0.25% reduction in the repo rate already right now.
And, a lot of people, Dr. Jammine, were also looking at the issues around the economy. You listen to the Reserve Bank governor, for example. He talks about the risks that remain as far as economic growth is concerned. He talks about, the contraction that we saw in the first quarter. And he does say we're still not out of the woods just yet. How much of a factor does this also play when we look at where things stand right now?
It does play an influence. I mean, there are a number of different factors that influence the Reserve Bank. What I've already mentioned is their own inflation forecast. Secondly, what the economy is doing, and you've so as rightly suggested, it's weak and therefore could do well with some interest rate relief. Thirdly, what interest rates are doing overseas. And fourthly, what inflation expectations, as reflected in the various surveys that the Reserve Bank looks at, are suggesting. There, the news has been good. The latest inflation expectation survey showed that those expectations have fallen by 0.3%, but they are still up at around 5% above the 4.5% that the Reserve Bank is wanting to target. And there's one other factor that he obviously didn't explicitly mention again, which is important, and that is the Reserve Bank itself is really trying to put pressure on the government to reduce the inflation target, because they believe that that is the very vehicle through which they can influence inflation expectations downwards and, as a result, succeed in bringing down the overall inflation rate. And that is another reason why they would like to keep interest rates probably higher for a little longer than would need be the case, simply to depress inflation and inflation expectations by more than is the case right now.